Is August 19th, Wednesday. So I wanted to recap the market today, and we're gonna do our normal kind of game plan with the X3 system. You can see I don't have my game plan up here. I did mention to you before that we're gonna eventually have the game plan embedded into the system, so that'll be all there. And my hopes is that you all will have the same game plan, and you will look at it the same way as me. And so from there, right, you have an understanding of what is it that we're seeing as far as being bullish, bearish, retracement, gaps, like all of those caution flags, like anything like that in that nature, we'll all have it being the same. Okay, so for the time being, we're just going to build this out ourselves. It's better to kind of go old school and just kind of do that. And so what I would like to do, is to obviously figure out, right, our main 5 steps process. Number one, right, is trend. Are we bullish or bearish? Number two is, all right, price action. All right, are we expansion or contraction? Number three is price range. All right, the range in which market makers give us, which is the expected move. Four is price levels, the levels and the destinations we're going to be traveling to within the expected move or the price range. And then 5 are the signals at those particular levels, right? Whether we're going to move north or south. So that's the 5, right? That's what we need to understand when we're looking at the system, and that's how you should be processing this from top to bottom in that priority of order, right? It's not signals first, it's not levels first, it's trend first, then price action, then range, right? If you can prioritize that in your mind, you're going to do very well. Most people get stuck at signals, right? In fact, I think I get people that are kind of stuck in the middle and not know trend or signals. So whatever the case may be, make sure you process this correctly, okay? So for trend, number one for us, we're going to look down here. We're going to see that the daily is bullish, right? So the daily is bullish right here because it's cyan. So I would always tell you that we want to go in. Let me lock this real quick. We want to go in and we want to see what the daily looks like. So I'm going to do that. Okay. So let me go back here. All right. And so let's say I don't want to see all these lines. I can get rid of that. All right. I can even get rid of this. Right. And then that'll be that. And so for us, we're just trying to figure out where we're opening up at. And so you guys know what I like to do. I like to kind of draw a line near and around where we're at. I probably will have something where on the daily I don't need to do this anymore. But for the time being, old school, I will do this. Right. We're opening up right around there. And then I'll zoom in. Another tool I've been thinking about, some of you guys are asking, like, how do you zoom in? I know Thinkorswim, we used to just like click and drag. Here, you could use this tool, and this is really a trading view tool. You can click and do that. What I probably would do instead is with the cursor on, you're just going to hold control, and then you can do this. You can just click and drag, and you'll have that. I think that'll be an easy way to just get to the zoom tool without having to do all that other stuff, okay? So this is where we're opening up at, okay? And then we're going to see right here that we are opening up higher lows, right? So we're opening at higher lows. So we're opening up right there. And then what that means, because we don't know where this candle, we don't know what this candle looks like right now. We're just going to draw a gap, right? Which is what I've always done. And then we can see that we have a gap there. And so what do we need to be cautious about when we see a gap is that potentially come back down to fill the gap, right? So we would just type in that EMA daily is bullish, right? Or bullish, but gap up, and then cautious of gap fill, right? Gap fill back down, right? Whatever you need to say to yourself. So that's what you want to make sure you are being aware of. So right off the morning, you might be looking like it's really bullish. I'm seeing that EMA here are bullish even on the 5-minute, but you'll have a caution flag to say, hey, we have a gap. We may want to come back to fill the gap, okay? So that's one thing that you want to make sure you're marking. And then I would always say to you, and it's that if we are opening up higher than the previous highs, then in that sense, which direction are we going? So what I mean by that is if you're seeing it from the daily chart here, you're going to see that we obviously ran up and we were bullish here, right? So we ran up, but then we went lower highs, lower lows. And I told you guys on Monday is the reason why I swung puts on the way down, which was a bit of a hedge really, because this is the first sign of a retracement, lower highs, lower lows. And in fact, today, and I know this is kind of fast forwarding a little bit, this is an early sign of potentially higher highs, higher lows, right? So could we then reverse back here too, right? So that's going to be something we want to pay attention to. We don't know, right? But this is something that is very possible. This could be a reversal back there too, okay? But I'm just highlighting this for you because what I want to share with you is that we went down. So in this case, we went down here, right? So let me snap this back. And then we want to figure out what kind of retracement is that going to be, right? So we know we're opening up here, but could we move back up? And if we're going to move back up, where is the retracement target, right? So if you're going to do that, you're going to see I drew this in already. I'm going to remove it just to show you, right? The retracement would be from that trend. So again, this is the trend back down. If we were going to go back up, how far are we going to go up? That's the question that we have. And so then we would draw a fib retracement from that trend here back up. And then we'll have the 50% and then golden fib. We'll have all that. You can see that the system already created that for you. So that's why we already have this already in place. So you'll have it. But again, going old school here, you can just have this drawn in so you can understand the critical nature of this particular level, right? I also went ahead and just kind of drew out the previous day low, or the low in which we had a gap previously, right? Because this whole time in the morning, right, before, we also had a gap here, right? So we had a gap here. And then as we open up here, we're already inside this gap. And so that's what I'm looking at there, right? So you can look to see that could we potentially fill this gap. This whole entire area was already kind of in blue. And that's where the gap is. In the future, I will create the gap, auto gap for you, so you don't necessarily need to draw it. But I just want to show you that this is how we're capturing it. Okay, some of you guys like to look at wick to wick, which is what I like to do. Some of you guys like to look at body to body. Who was that? That person muted them really fast. All right, so with that, just make sure you understand there's gaps here. Okay, that's how I'm looking at it, is from wick to wick. So from there, you're gonna see that the potential is that if we're gonna retrace back up, right, we are going to then, just to show you one more time, because this is a concept that everybody needs to get, we're either going to go back up to retrace to the golden fib, fill the gap, or 50%, right? Regardless of all of that, as long as we're remaining under the 50% here, we're still essentially, from this trend right here, we're still slightly bearish. Right, we haven't confirmed we're back bullish yet. We're in a bullish trend, but their fibs is not matching up. So in a sense, you're getting bearish or a supply, and then you're getting bullish here. So until we can break back over this 50%, we're not bullish on both fronts, right? It's only from the EMA front we're bullish, and so we're currently in a retracement. Okay, so that's the thing that we want to watch, and the 50% will be really where we need to be at. Now, the other thing is, you know, if you're looking for, and we did this in the past, where if you're looking for like, where could we retrace, right? You can draw a fib here too. So like what I like to do, where we have a gap, so you can see there's a gap here too, right? I would draw a fib here. So I'll have that fib. And then if you like that, right, or you want more, then you can add more. So I can do a gap, or I can do one here. So I have all these levels kind of mapped out, right? And this one, then I add it right at the golden fib here, okay? So you can kind of see where you are and what levels you should be watching. And so the other thing, and for those of you who are brand new to apprenticeship, and I said this in the chat, and some of you guys have questions, so please continue to ask questions, because we're gonna work out giving you the all the classes that you need in order to understand supply and demand zone. But this point right here, we went lower highs, lower lows, and then we pivoted back up, right? Without any levels drawn for us automatically, it's obvious to us that at this point, when we went lower highs, lower lows, and then we went higher highs, higher lows, we pivoted down and then we pivoted back up. So this pivot right here is where you would see essentially a demand zone, right? Like right here, essentially be a demand zone. So right around here, you can have that drawn in. That'll be a demand zone. So if you wanted to, because some of you guys were asking even yesterday, it's like, well, where did we look for here? And I think I went over this on Monday, I think. this is the level we bounce from. So if I were to show you this, just real quick, because I know that we're talking about today, but just to show you yesterday. All right, so let me map this out. You see the level right here? You guys see this? Look at this. That's the level that we're kind of bouncing off of. Now, in the future, I've been thinking about this, and so I do want to share with you guys. I might do an overlay of all of the SPY and Qs together with SPY. We might have just like our own custom chart that shows all three, where what we would have seen here is that QQQ had a level here. There was a big level here, okay? And I sent that to you guys in that apprentice chat, all right? So extra work for us to kind of have that drawn in. Potentially I can have this kind of automatically drawn in for you in the future. But I want you to see that, by having that there, you can easily tell there's a level. There's other levels there too, but it's not as obvious as it was on QQQ, okay? So with that, again, we're talking about trend for today, and we're just talking about the fact that the EMA daily is bullish. We had a gap, be cautious of gap fill. And again, I just shared with you here that potentially, we have the golden fib, right? We have the golden fib, we have the gap, and then we have the 50% right there. Okay, so those are my main targets, and so those are the things that you wanna watch out for, right? To see where we can potentially retrace back up to. Okay, so with that in mind, right, and even here I could probably make this that would make more sense because we're under it right now. That's probably how I have it set up. So we have here bullish but gap up, cautious of gap fill back down. Okay, check. And if we're going to retrace back up, so I'll put if retrace back up, then right, what's our target? Our target is going to be the golden fib, the gap, or the 50%. So I'll put gold fib, gap, or 50%. Right, one of those. And that's all the levels that you'll have in a sense for us to get to today, right? And the reason I like the color coded is because you're gonna see, like when I overlay the golden fib or the supply fib here and supply fib here, that this area was pretty bearish, right? Like there's an area right here where unless we can break over the 50%, we should remain bearish here. Okay. For price action, we're gonna look down here, right near open. So 930, there's a low squeeze. Low squeeze for me just represents kind of a little bit of congestion, right? It's not much. So I'm not going to think that it's going to deter price action to move in a way that it's more expensive, right? I'm not expecting too much volatility in that sense. So for me, I think of a low squeeze. I literally will be like low squeeze, like that's how I type it up. And then I'll look at the 1 hour. So here in the morning, it's about 9:30. So right in the morning here, I can filter that out, and then I can see that here's my squeeze. And if you don't like all this extra stuff in the background, you just click here, and I'll clean it up a little bit. And then from here, right, I can see that we're starting to curl up, and if we can break over the zero line, then we could be bullish, right? And so that's what I'm looking at there is the fact that, hey, look, we're going very much close to the zero line. We gapped up. And so if this is going to break over the zero line, I'll be a bit more bullish to see that we might start to then squeeze out, right? So that's what I'm looking at there in the morning. And so that's what you should have, right? So in this case here, you would go and just type it in. You'll say down, ascending, or in this sense, we always say ascending, right? It's bearish, but it's down and it's ascending. It's trying to go back up. And then from there, if it breaks over the zero line, my thoughts is that we can squeeze out. So very much bullish here, right? So in this case here, you can say bullish, right? You can say all that, and then you'll be good to go. Now, for some of us, we've always looked at this as if we are going to be bullish, right? And we are ascending, well, how ascending are we? We've always asked that question. And so in this case, when you're looking at this and you go back, you're going to see that, we're not over the zero line yet, but we are not anywhere close to the previous high here either, right? And so we would say there's some weakness at the highs. That's how we've always looked at it. But the addition to X3, we have the fact that it's above the zero line. So the potential is that if we break above that, we can squeeze out. So that means that unless this goes higher than this previous high, we could probably go up, but not fully sustain that squeeze firing momentum out and get weakness at the highs, because this histogram here is lower than that, and then start to come back down, right? So those are some things that you can make a note of. So you can say low squeeze ascending bullish, right? And you can say, or you can say but, or you can say lower highs, or you can say weakness at the highs, however you want to say it, to kind of tell yourself that, right? And in fact, this is just a low squeeze. So again, I don't anticipate that it's coming from contraction to expansion. And so I don't think there's going to be, essentially, it's like coiling up, right? A burst of energy coiling up to then expand this out. Where you see that was here, like we saw it here, and that's why we got this move. After the fact near open, now we're dealing with the low squeeze, right? So that already took place. Okay. So with the low squeeze, what we're going to want to see after this firing is that, does this get above here, right? And you would just kind of write that down based on what you saw. I mean, the fact that we're down here, like, or right here at open, you would already see its lower highs. Okay, so I would definitely filter this, right? And if you don't know like how to do that, I mean, here's right near open. Just click on it and it'll do the filtering for you. Okay, and you can see, just going over this, what has squeezes. So just keep that in mind, how you write that down, okay? The other thing is, here near open too, it's gonna tell you. It's gonna literally tell you it's ascending. And so the other thing I'm gonna add later would be the divergence or the strength. It's gonna say lower highs, okay? Price range. So price range for us is basically the expected move. So we see the expected move, and so it's on the chart, right? So if you want to clean this up, just because we're looking at this after hours, I could remove, the 2H and the PH, right? And then I can just look at the plus and minus. So expected move here takes us to 775. So we can see that right here. And then down here, we have this range here, right? So make sure you always know where it's at. Pre-market, this actually starts to move, and it's going to adjust to it, and then it's going to lock it in place after market open, right? So then it's going to lock in and say, this is the range that you have. So within the range in which we're able to travel, where are the levels that we can get to, right? And that would be all the dashed lines and these zones that we have and all of that, okay? So with this range, we've always said that if you have the range, and this is what market maker is giving us, then the thought is that if we can get to that expected move, that can happen 90% of the time. And if it happens 90% of the time, then the typical ROI we typically would get for that is about 200%. Okay, and that's a minimum ROI. So in this case here, you can kind of see we didn't really get those expected move here on SPY. I believe like DIA was going up, and then QQ was going down. So I've said this in the apprentice chat, that there's a relationship between all three, right? You guys know, or if you didn't know, SPY is the top 500 companies, and it's the ETF for the S&P 500, right? The biggest 500 companies. And then NASDAQ is the top 100 companies. And then the Dow, the DIA, is top 30 companies. Particularly when I'm looking at the Dow, I don't necessarily think so much about tech companies. I think about the health companies, the oil and gas companies. I think about other sectors aside tech, right? It's not to say that the Dow has no tech. It has a lot of tech. But I particularly look at that in that way. And I'm thinking about SPY and the fact it's split between tech and then the other sectors, right? So if you're getting DIA going up, right, and then Q's going down, SPY is going to contract. It's going to consolidate. So if you can have all three up, which is what we always do in the apprentice program, then you can see, is there confluence with the fact that, do I get Q's and DIA going up together with SPY or not, right? So pay attention to that. Okay. It's going to also help you too, because like I mentioned earlier, you have other big levels, especially on Qs, and that's going to influence SPY, right? So having those up is gonna help. So again, with the range, and I think I could do this. I thought I did do that. Yeah, I could do this. So you can see it's about $5 and change, and actually it didn't open up here. It's opened up somewhere up here. So it's more so it's more like $4 and change. Okay. So from that, you have your range in which you're able to travel, and then we're going to look at the levels. Okay, so from the levels here, right, you're going to be able to say, all right, right near open, right, if I'm going to travel north, you're going to start at a level. So the level is already drawn out, so you're going to start at right around 770 here, so right here, right, and then you can see it's about 29,000 OI. And if you're traveling north from that level, right, so I drew this line, so you don't need that, where could we go? And then we just said, right, if we're going to move up, we can travel in the retracement to the golden fib, the gap, or the 50%. Okay, so with the golden fib, right, you kind of have it in this area right here. So the next target would be somewhere right around here, and this is the gap here. So in a sense, I mean, I can double this up. You kind of have this area right here, right? And if we go further out, then you have this here. Okay, but you can see that by highlighting, and this is really the reason why I have this kind of have it built this way for the Fibonacci. You can see the supply zone. You can see the zone in which we need to break above. Otherwise, when you enter this area, you will feel a bit more bearish, right? The old Fibonacci, the Fibonacci you had previous, right? You wouldn't have this shaded. And in fact, you don't need to have this shaded. If you don't want to, you can have it default to something that you like. I like it shaded because it gives me a better understanding that I'm still retracing back up against this trend that's bearish, even though the overall EMAs is bullish. Make sense? And then from the way down, right, or on the way down, 770, you got 769. Not too bad, 12,000 OI. So you have that as a level, right? It may not be a big level, but that's a level. And then you got Ichimoku here too, down here, so you can mark that. Right, and also you have that level that I just told you about. So you have that, or Ichimoku, it's kind of all in the same area. And then you have your other targets here. All right, so expected move. And then one thing I'm gonna let you guys know, expected move for us is not a level. So for me, right, this is simply a range. It's like the range that you have in your car isn't a destination, right? So the expected move isn't a destination, okay? The other thing, and I wrote this in the chat too, is that the clouds, which we call the squeeze bands or the squeeze clouds, those are also not levels. The way you should look at those is those are turbulence, right? That's what's going to cause turbulence. So imagine you're on a plane and you're hitting turbulence, right? You're going to feel the turbulence on your seat, and then the pilot will decide whether to drive through the turbulence or not drive. It's going to fly through the turbulence, or it's going to then maybe go above it, right? Above the cloud or below it. I mean, it's going to try to maneuver around it so the plane doesn't come down, right? So it's just turbulence, right? Doesn't mean that the trend changes. Doesn't mean that we're going to come right back down, right? Until you land at your destination, that's the only reason why it would then drop you off and then move over to either the next stop or turn around and go back to another destination, right? So consider it as turbulence. When we're looking at the squeeze, one thing is to understand too, from a technical sense, is that it is simply showing you overbought, oversold. So when you're seeing it, it's overbought. But if you start to consider that, oh, it's overbought, then you might start to think that, oh, it's overbought, so I should get out because I don't really want to deal with the fact that if it gets to that point where hitting turbulence is going to come back down. What we come to understand is that when you see the squeeze are there for a reason, and the reason why we look at squeeze firing is that from contraction, from the congestion, right? When you have, let's say on the freeway, it's all congested and clears up, then traffic flows through, right? So it's the same thing here. When we get congested and then we clear up, then we're going to get a squeeze, contraction to expansion. So even though it represents overbought, oversold, it doesn't necessarily mean that, going to the top of the bands means that you should exit, right? Look at the squeeze histogram that you have here, understanding are we below or above, and there's strength or weaknesses from there, or divergence. Those are things that you want to be able to apply when you're looking at this stuff, okay? All right, so I'm going to remove all the line or the ovals here so you can understand. I want to give you just a bit of a highlight as far as illustrating where all of this stuff goes. I think I'm doing pretty good with time because I'm pretty much going to finish within like 5 minutes here. You have your range. I shared it with you. You have your levels, okay? And again, the levels are all the dashed lines, so you'll see it, okay? So you want to make sure you understand where you're going. If you didn't do the work and you don't have, let's say, you have this again, mine would be blue. I have a blue right here because it is showing me the gap, right? Or in this case, you could draw a line. I know that that's a target, right? Or if you didn't have the fibs, right, then you wouldn't know that's a target. So you can see all that little work you have it, and then in X3 you have that as a level. Now the important thing is if you don't have it drawn manually, you might not know the significance of it. You might look at it like, oh, that's just another line, right? But in this sense, we can see that this is significant because we're starting to retrace back up. It's higher than previous highs, and it's higher low. Well, we didn't know it was higher lows, but it's basically higher than that. So could we possibly retrace? That's the only reason we do it, right? It's easier when it's like the same trend, right? It's so much easier when it's like, oh yeah, that's higher highs, higher lows, higher highs, higher lows. You wouldn't have to do this work. But because of the fact that we're seeing it turn here and we're seeing it kind of essentially turn here, we don't know which way we're gonna go, okay? Interesting enough, I mean, the market as a whole isn't in that much of a squeeze yet. I think Q's might be. So we'll have to see tomorrow if we have like a 1 hour, 2 hour, or even 4 hour squeeze that comes up, because this is a bit of contraction that's taking place right here. Okay. So with that, let's go and just kind of read this out, right? So levels, I would typically write that down just so you remind yourself, and then range, I would just probably have that up, just kind of remind yourself. So in the morning, you're going to be bullish. You have a gap up, and then you got to make sure that you're aware that we can possibly fill the gap. So in this case, I'm going to bring that back up, right? Just so you can see right near open. And there's that gap, okay? So in the morning, right, we got to this fib supply zone. So from that, you get a put signal. We fill the gap. Probably immediately you fill the gap. I would probably take profits. One of the rules that we've always said, I think it's a very conservative and is a really good rule, is that if you're going to trade the first 30, take profits for first 30. Okay? Because this is retail period, and I told you guys retail is getting in, getting out before you go to work, making your quick bucks, and then smart money takes over here after first 30, and then you can trade that, right? We know if you're grabbing puts here, you're grabbing a retracement. You're grabbing a put to fill the gap, and you're retracing against a bullish trend. You know that. So the other thing is pay attention to, obviously you have 769 is a level there too, but there's a 50 EMA here as well. So I've always talked about how you can have a signal 920 cross down, but unless the 921 and the 50, or the 921 cross under the 50, we would still be bullish. So for example, here, right, this is when everything kind of falls down and we're bearish. But here we're slowly becoming bearish. But here's where, we're kind of confirming that. So hold a bit more weight to the 50 MA. If you want to turn it on, you can. I don't like to turn it on, but if you guys like, I need to turn that on to see it, that may help you, right? Like, oh, we're at a level, or oh, here we hit 50 MA. Okay, we broke under 50 MA, right? Oh, we're back at the 50 MA. You guys see what I'm saying? So maybe having it up could help. I don't like to have it, but it's entirely up to you, right? Some of you guys are new to it. This could be beneficial for you. I have those that are, they have the 9, so like they have all of it. I don't like that. I would say the 50, but again, to each their own. If you want to have that in there and you're able to do well with it, then keep it, okay? So after the first 30 here, I'm bullish. Even if I see a P5, I know it's what? I know it's a retracement. And in fact, this signal goes here, right? Back to the 769. From here, you're looking for a signal, boom, call. From this signal goes to what? 770, and then take profits. This signal here goes from what? 770. Over 770, we wicked off, call 15 at a level, going back to where? Trying to fill the gap, or in this case, we have your golden fib, all that, right? This zone right here. So you're going here to the zone, okay? From this, right, you're gonna see that we have the squeeze here too. So when you are seeing the signal and you're at a level, right? You're starting there first and you're bullish. You see you're bullish here, and then you see a squeeze. Immediately look down, right? Immediately look down. And if you're trying to figure out like what has a squeeze, I just click on the flashlight here, and it tells you right here at that time what has a squeeze. If you can't tell, all right, just click here. It'll just show you what has squeezes at that time. I would tell you that if it's stacked with squeezes, like if it's more than just these two that's shown, just start from left to right, meaning smaller time frame first. So in this case, it's a 5 minute. So just go 5 minute and just focus on that, right? And so what's obvious here is that right around here, you're bullish and you're starting to ascend back up. And then you see that right near that, we're starting to approach the zero line, right? And as in your expectations that if we break above that, we're definitely going to look more bullish here, right? And then you're going to see here as a follow through, once again, as we're moving up, we could potentially squeeze out. But in order for this to go even further, right, we've already squeezed out. Here's lower highs, so there's a weakness at the highs there too. So yes, strength at the bottom, seeing that we also had higher lows here, right? So there's a bullish divergence there, or in a sense, it's not even a bullish divergence because we're going with strength of being bullish, higher lows here and higher lows here. You're moving up, but you have weakness at the high. So unless we break higher than that high, we're going to be expecting that there's some weakness there. Okay. And then if there's other time frames, like I said, then follow through with it. So in this case, we have the low squeeze here, right? And you have the 1 hour. So if you want to look at it from that perspective, then you have that as well to want to see what's going to happen with the low squeeze. Okay. Regardless of that fact, squeezes again are turbulence. Okay. You want to see, are we going to get strength and divergence? And in this case, do we hit a big level or a big zone? In this case, we did. And then we started to then come down. Okay. Again, see how important it is to map all of this out to begin with, right? From here, we ran up, and I could do a little quick recap after the fact too, because I'll just do it right now actually. Like if you enter here and I think I did this earlier with you guys, but 771, like let's say that was, like it's a pretty good trade, right? Let's say you got half of that, still 100%, you know what I mean? So that's pretty good. And then from there, right, you're seeing we're starting to come down, and then you see a P1. This P1 is a retracement. And the reason why this, to me, would be a good trade to take is because you're entering into like this retracement period. So just so you guys know, right around like this 11:30 to like 11 o'clock, this area right here, this is where like the 11 o'clock is kind of like the start of the lunch period, right? This is where everything can kind of start to change. I've also seen it kind of last all the way till the 11:30 too. But just be critical about this area. I might even add this as a critical line. Just understand that we might have a shift in direction here too. Okay. So when we're seeing that this is starting to come down, essentially, if you think about it, right, if I map out another 1 hour here, right, this is a 1 hour candle coming down. And then if you want to map it out from a 30-minute, I'm going a little bit more technical here. Here's a 30-minute coming down. And then if I do another one here, this is another 30-minute coming down. Right. This is all part of like understanding multi-time frames, right? These are the intervals in which different time frames can impact the markets, and you're able to see the visibility of it on the 5-minute chart. So I'm just giving you where the critical times could be. I've seen this a lot, so make a note of it, right? Again, I might add it to the critical time so we have it there. Maybe that's a dash line, but this one for sure, because you can see here, right, at this retracement lunch period, what I would always say is that if we are running up here, typically the retracement period means that we're coming down. So I'm not surprised as we ran up, hitting the fib supply zone here, that we're retracing. We retrace all the way back down to, actually, I think I turned this up. Yeah, so we retrace all the way back down to the 90 MA daily, which was kind of right here. All right, I can remove this now. And the 770. So where do we trace back to? Boom, here. Got an oversold signal, maybe take profits there. You're at the 50, remember I shared that with you, right? And you're at this big level here too. See one, then you'll grab this back up. So again, I would trade this only because we're near the retracement period. I'm okay taking this back down to a big level. Okay, I would take this C1 back up only because we didn't really fill the gap. And so I don't mind taking it, but I also know that there was really no squeezes. There was really nothing here. But I would also know that if I had like a low squeeze here and it's like lower highs, like it's ascending but lower highs, I would then think that there's going to be some weakness there, right? The other thing is you have a big level here. I mean, that much of it is pretty obvious as well. Okay, so as you're running up, you might be thinking, okay, we can go up here and go up here. But in this case, we hit the golden fib and then we start to come back down. Okay, so then P1 again, I wouldn't mind taking it here because in this sense, what you got to understand about levels is that this 770 is 29,000, so it's a pretty big level, right? And so what I mean by that is understanding levels is to understand the gravity and the weight of how price action maneuvers and consolidates around them, right? So what you're really seeing today is that this 29,000 at this high OI, right? Let's see if I can showcase it here. I think, can I showcase it here? Yeah, so this is, wait, I have this further out. The 770 is missing from this, is it? Yeah, I think 770 is missing from this. I gotta look at this. But 770 is a big level. You guys see it here. Just looking at this right now, 772. Not sure why it's missing. Oh, okay, hold on. Yeah, here it is. So you're gonna see right here, there's 17,000 OI, right? And so what I want you to just kind of picture for a second, when we're looking at where we're opening up at, right? So near and around like 770-ish, and you're looking at the range in which you can travel, right? So the top of the range is here, the bottom of the range is here. Where is your biggest OI, right? The biggest OI is currently at 770. What's in the further stretch of the OI is this 775, right? But what we come to understand is that the bigger the OI, right? Let me remove this for a second. The bigger the gravity that it can start to pull price action towards. So in this sense, this is kind of how it looks like for this level, that we are just going above it, below it, above it, below it, above it, below it, right? And so forth. So we are simply contracting around 770. If we were going to move up higher, right, then we would need a bigger magnet, a bigger OI that we can then travel towards that point. So in the sense here where 775 is 58,000, I mean, it's much bigger than 770 here. We could definitely try to get there, right? But there wasn't enough weight to cling on to, let's say at 772 or 773. If there was, there would have been a bigger OI, right? There would be a bigger and a more massive OI for us to get there. And so we just simply kind of came back here. And then on top of this, on QQQ, you probably see the same thing, that there was a massive level there, and then we start to consolidate. So those are some of the things that I want you guys to understand, that not all high OI levels, or not all levels, depending on the size that they have, they're either going to have a bigger kind of magnetic pull to the market or not. And so it's obvious for us is that if we are traveling to like from 770 to 771, that's 5,000 OI, which is really nothing, to 772, 13 OI, that's something, that's double digits like I always seen, that you have nowhere else to go but back to 770. In fact, I would skip 771 because it's a single digit, right? I just look at that as 5K. So what that tells you is that if we get to a double digit 772 here, then you have no choice we get to go to 770. If you go back up here to 772, you have no choice to get back to 770. If you guys are looking at like weekly pivot support and all that stuff and 771, this is just confluence. Like if we had big OIs right around and near these levels, that would be confluence of the fact that that's a big level. I still think, my belief is that if we know that price action or prices are going to go somewhere, or market makers are going to have smart money bets, right, in place pre-market, and it's going to know where these lie. Where these are technicals that are kind of lagging indicators, or in a sense, these are kind of projecting indicators, these pivots. And so they're not necessarily levels that are, not to say that are not valid, but they're not as critical as these OI ones, right? I mean, the OIs has been always kind of our secret sauce, right? That's the thing that's going to help us to see where price action may go. So when you're mapping out levels and you're prioritizing it, it's like you got 770, then you got 772, right? Like if you just did that and you just simplify the game for yourself, which did I do that right? Right? If you did this and you would say, let's say you chose 772 together with what, the golden fib, you would know that from here goes to here, from here goes back to here. And then from here, like another double digit here, goes back to here. Like the start, end, start, end, start, end, start, end. You know what I mean? That's how you kind of dumb this down for yourself, right? Make it easier for you so you're not looking at all these different lines and all these different things. Have a sense of where we might go. Where do we land, and where do we start? Where do we land, where do we start? That's the biggest advice I can give you guys. That's all part of the game plan here. Because if you don't have that mapped out and you don't simplify it and you just look at it like this, there just looks like a bunch of lines everywhere, right? And you don't necessarily have weight to what it may do, right? But if you map it out like the way I shared with you, then it might give you a better chance. Right. I still would like to have these up. Like I don't want to get rid of these, but if you wanted to like literally get rid of the pivots, you can. But I still like to have them up. I mean, in fact, you can probably make them less bright if you want. Things like that you can add to your arsenal, right? Just to kind of customize it the way you like. I like to have them up because I see price action maneuvering and consolidating around them. I can see that we broke under this level and have a P5. I can see we have a put level here under this pivot. You guys get what I'm saying? Where if I didn't have it, I would feel like, what level are we getting a signal from? Okay. So from there, again, just to kind of go back to the recap for a second, puts back down to 770, under 770, double digits, 769, take your profits. Then you're bearish, right? You're looking for puts under 769 again. If not, respect that level and then allow the retracement, right? And then you're still bearish here, right? Then you got puts again here. So at this point in time, this was when the FOMC minutes came out. I had some people that caught the C1 for 100%, and I had some people stay with the trend underneath the auto fib, caught this here for another 100%. So whether you caught this 5-minute trade, that 5-minute trade, these are positive trades. And if you mapped it out, you would know 770, 769, 770 to, basically this pivot here, or basically 770, 769, 770. Okay. You start to consolidate right around there, and then you have the squeeze. Let me remove the animation for a second. Right. And again, you can go back here. I probably wouldn't have it like this. I like to have the flashlight on. It's like what I like to have on. Then you can kind of see it that once we're here, you're in a squeeze. I would look, right? So here, as I'm looking, I'm seeing we're ascending, right? So if I just go to the 5-minute, let me go here. I'm seeing we're ascending, but it's what? Ascending, but lower highs. So weakness at the highs, and we're bearish trend because the 50 MA is behind it. And we're going to 770. Okay. So as we're moving up and as this is bullish here, I want you to also understand it's lower highs. It's under the 50 MA still, right? 90 MA, under 50 MA still. What do you think is going to happen? Right? You're going to be looking for puts. Are you going to get these retracement trades back up? Probably not. So under Ichi, you're bearish too. If you grab this, let's see, we do a little recap on that. I mean, let's say you grabbed it like, I don't know, maybe not all the way down, but if you got, let's say here, let's say you got a 769, right? That's still a pretty good trade, right? And that's not even at the top. Okay. So you can do something like that. And just, you can see that when I'm looking at this, it's trend first, then squeeze, understand the underlying, whether it's lower highs, higher lows, all that, over the zero line, all that. And then it's what level, and we know the range is wide. So what level within that range, and then it's the signals. The only reason this signal mattered is because it's at a level, right? There are going to be signals that are not necessarily at a big level. So what I consider not being a big level are kind of like some of these pivots here. But these like 770, you know this is a big level. We've been consolidating around this all day. We were either going up around it or back down to it, or back down to it and up and you know what I mean? So it's a big level. Okay, so with that, that's the recap. I know it went way over. I just want to make sure I go over all these things so you guys understand. Let me know if you guys have any questions. You can get off of mute or you can type it out, and we'll look at the chat here. And hopefully you guys got a lot. Let me know. Give me some feedback if you learned a lot. If you have any questions, let me know. Is there anything in the chat? Okay, and look, if you need to feel free to take off, feel free to take off. That'll let me know that I can also take off.
Clark, I want to say something because I saw something in the chat today.
Yeah.
Hold on, let me pull up my. Oh, my charts just went away. Hold on, let me pull it back up. Sorry, 1 second. So, like, kind of what you were saying, I saw Eric chatting in the chat today, and we've all been there, and whatever. But the reason that made me get that trade literally at the 50 ESD on Q was because SPY and DIA. So like it was like if you look at the same time frame at about 10:10 my time Eastern time, DIA was over the 9 EMA, SPY was still bullish, and that trade made sense to me, and it all lined up in the same way possible, where the kind of what you were saying with like SPY and DIA and just what trend to take. We were definitely trending bullish, but and then we got the oversold on that next candle. So
yeah,
it just made sense for me to take that, and I don't rely on the signals per se, but the levels were there holding everything else to make that trade possible, pretty much. If that makes sense.
No, I mean, this was a great trade. I mean, it's actually probably a lot cleaner because of the fact that, you know, you got the puts right here to expected move at 713. That's beautiful. And it had an oversold signal after first 30 minutes. We went there, you know, and if you're going to look for it further down, I mean, you know, we just simply came back up to 715. Got a signal above that level, going back to 717, 718. I mean, that's about it. I mean, it's pretty simple trade. You know, as long as you like for everybody, it's like as long as you know where you're going. Like if you have no idea that level can cause price action to reverse, then that's a problem. You know what I mean? Like
so when I say that, I grabbed the 718s, they were point I think at the time when I grabbed it, it was 0.16 delta, which I usually grab right at the money. But looking at the price action on DIA and SPY, I grabbed that because I knew it was going to go there because it made sense. And when you were talking about OIs with SPY and stuff like that, we weren't going to get to, we weren't going to, what was it? Hold on, let me look earlier when we popped up. 775. That was the biggest OI. So 772 was probably the biggest one I was seeing, and that put DIA right about, or that put Q right around 718, and we did pop there, and that put it right by the Ichi.
Yeah. So, yeah.
It's just price action and watching all three at the same time and levels and everything else. And
yeah. Yeah, and then one big thing too with like Qs, right? And this is something that you guys have seen us talk about in like the other recaps, right? I've always said, what do you guys always hear me say about when a 1 hour squeeze just formed?
Yep.
Right. So that's like one of our, not a rule, but that's our belief is that if a 1 hour or a 2 hour squeeze form in the morning, we do not believe it's going to break free from that. It needs time to congest, so it needs to do. It won't go all the way down, right? 90% of the time, it should not break free. So what do you think is going to happen? It snap right back up. So that's just another thing which I'm happy to see in X3. It's exactly how it played out, right? So if you have that game plan, and this is look at this. This is pre-market, guys. You have this information. So guess what it's gonna do? Guess what? You're at the top of the bands. We just said it's not gonna break free of that. Where else can it go? To the bottom of the bands. Okay, we said it's not gonna break free. It's still in the morning. Where else do you think it's gonna go back up? That one belief, right? Like look at Soup. He made 400%. You know what I mean? He got at the top. That's another 400%. Here's another 400%. That's huge. That one belief is huge, right? So add that to your arsenal. I mean, it's something that you can take advantage of.
And that trade lined up, honestly, probably where I grabbed it perfectly, looking at SPY and Q, and I know some people in here, this is Apprentice, but like the scanner, we saw healthcare, so DIA was not going down.
Mm-hmm.
So that's another thing about Ascension, but like right there, that's when I grabbed it right off the 50 daily.
Yeah.
So,
yeah, and I know like you've gotten to a point too where you're not so reliant on getting the signals for confirmation. But what I would tell everybody here, right? Like the signals is the reason why we say it comes last. But what the signals is telling you is to confirm certain things, right? It's to tell you that at this level, are you going to be more bullish or more bearish, right? It's giving you some signs, right? It's telling you that, hey, look, at this level we're going to come down. At this level we could potentially come back up. At this here we could potentially come back down, and we're at a level. So if you pay attention to it, read it. Don't just look at it and say, oh yeah, I see this little wedge here. Like that doesn't mean anything. No. It's telling you we might be exhausted to the downside. We could possibly come back up. What does this tell you? Oh, we possibly at 715 we're breaking up back to north, right? So you want to read it. If you don't read it and you're just like, I'm just gonna let this do its thing and none of this stuff matters, then you're not gonna be able to kind of respond correctly to the information you're getting.
And if I can add something to that too, it's when you get in those trades and you're already in them and you see the signals after the fact, that's usually
confirmation. That's confirmation. Yeah.
You're already up 50% at least. So.
Yeah.
No, yeah.
It's
there.
Yeah, I understand when you mention OI levels are critical. Can you rank the levels like OI, then weekly, high, low? Yo, I wouldn't necessarily rank them. Like they're all very much valid. I will send you guys that importance. Where is it? Like I will send that to you guys. I don't know where I put it. So you will have it. I would say the OIs in itself are one that you should definitely hold some weight to. I don't know where I put it. Those are the big ones, right? And again, the reason why I talk about retracements is because even if you didn't have any signals, even if you didn't have OI levels, right? If we remove all these levels right here, right? If we took all this out, right? Let's say we just left the ribbon here. You have an idea of where we're gonna go. Like this is the traction right here, right? This is where we're likely gonna go, and here's likely where we're gonna reject. So that's just all added confluence. Eventually you get to a point where like you don't really need too much stuff. You know what I mean? Like all this stuff is just extra stuff that you don't necessarily need. You can trade very cleanly without it. We're putting the guardrails in place for you to start to watch price action and give you and have the system kind of guide you on as far as what you're saying. Okay. At the end of the day, all of this starts from formulating a thought. All right. As far as are we bullish in the market? What can potentially play out? And where can price action go? Right. That's the main thing. If you start without that and all you see is this, and you don't have a big picture understanding of it, how that candle may form and what it can do, it can be very hard. right? So you have to zoom out and kind of start out from like a broader picture of the market.
Yeah.
Hey, Clark, with your histogram currently, is the 5 minute on only, or are there like a few others on as well?
I like to use a flashlight, honestly. I've been using that a lot. But for some of you guys that are like, I want to see just a 5 minute because the 5 minute comes first anyways, then just have the then just have the 5 minute.
So let's just say I have my like only the 5 minute on. What's like what does the flashlight do? I'm trying to figure that out.
This highlights whatever had a squeeze at that at that time.
Okay, so would you need it if I only had the 5 minute on, like the histogram, everything else off?
Well, if you have multiple time frames that squeezes, this highlights all of it, right? So if there's just a 5 minute, then it'll just highlight just the 5 minute, right? Or you can just click the 5 minute.
Okay, and then like let's just say I don't know if you kind of already said this, but like let's just say I use the 5 minute only for the histogram, right? And like let's just say like a 30 minute squeeze appears like during like that time. Should I also turn on that 30 minute histogram and see how it's like directing?
I mean,
Does that make sense?
it's again all added confluence. I would. I mean, I don't see why you wouldn't. You know what I mean? Like I would just have it up. It doesn't. I don't think it's too overbearing to kind of see all that, right? That you have the 5 minute here, and now you have the 30. If you want to prefer looking at it as a standalone and then switch it off to the 30 minute as a standalone, you can do that too. But I would. And again, it's all about just having extra confluence, right? Levels having confluence, multiple signals stacking on top of each other's confluence, multiple, squeeze being bearish or bullish is confluence. Like all of that is there, So when you're here, right? Like if you do this, it might be tough to read, but you can kind of see like this area is pretty bearish right here as we're coming down. Even this area here is pretty bearish here. But then like it's all just added confluence, right? Like having it all up like this, I probably wouldn't recommend doing this. It does look like a lot because the squeeze in itself is meant for like this histogram is meant for the squeeze. So like if you're using this to kind of get a sense, are we bullish, are we bearish? You're using the wrong thing, right? You should be using the EMAs. Like you should be using the ribbon here. You can see we're bearish here. You can see we're bullish here. Only when we have a squeeze do you want to figure out the underlying. Are we going to squeeze out or are we going to stay bearish? That's the only reason. Is this going to go over the zero line and we're going to squeeze out? Or is this going to go above the zero line and is it lower highs? Is it going to come back down? That's what you're using it for. All these other times, like here where it's expansion, like I don't care to see this. So that's why this option is also here too. Like this basically tells you when the squeeze actually occurs. So it's not something that I particularly like to use, but this is telling you there's a squeeze here. Oh, this is going up. Okay, oh, there's a squeeze here, right? So you clean this up. Oh, we're coming down. So you only care when there's a squeeze. This is the only time it shows up. So there's another view for it too. And then everything else here is all it's all the EMAs, right? You just look at the trend there. So that's how you would go about like navigating around that.
So did I hear you correctly? You rock the flashlight on, right? Normal trading day, you flashlight on.
Say it one more time, Damon.
So you had the flashlight on during trading days, right? So basically, the flashlight will capture all the active squeezes. So you just use the flashlight on.
Honestly, right now I don't think the flashlight is actually capturing it when there's a new squeeze, which I could probably. Okay. I think I can have it added on automatically. I gotta double check that. But if I leave it on, then it only looks at that particular time frame all the way through, right? Let's say there's no squeezes, that entire histogram gets turned off.
Gotcha.
Right, which is it's a cleaner way. So let's just say like in the morning we just had the 5 minute, And then later on, we had 30-minute on all that. I'm pretty sure right now it only highlights what we had originally, unless you click it again.
All right.
I'm pretty sure. But then I can probably have that automated and just have it always highlight the ones that's there, so you guys don't have to do that. But I like to use this because I'm able to see the entire transition for it, and I'm able to see the histogram, right? So like that's the reason why I like to have this one on it. I don't mind this one too. I honestly thought this one was going to be the one that I liked the most, right? Because it shows you just when the squeezes are occurring. This is when I care about it, which is okay. But I come to find out that I like the flashlight more. So, yeah, I mean, to each their own. I guess it's just figuring out what it is for you. I use this a lot from time to time, trying to figure that piece out. Because a lot of times we might be thinking, oh, it's becoming more bearish, but we're still bullish. So that's not a good view of that too. So you can do it like this. Oh, we're more bearish. I mean, we're more bullish. We're just starting to then retrace. That's all it is. And then having this, like for all these other ones here, let's say I take this out, like all these ones right here for yesterday, like you guys see, like when the flashlight is on, it'll look like this during this time, right? If I click here, that's how it looks like. So you got to think to yourself, when you have all this up here, again, you obviously see we're bearish here, right? Like that's pretty obvious, right? But when is the time in which we're looking bullish from a squeeze? Because there's so much squeezes here. I mean, I highlighted all the squeezes that we have right here, right? It's looking more bearish to me, right? Isn't this looking bearish to you? So wouldn't you be leaning, in a sense, more bearish, right? And then right here, this is just the 5-minute. So the 5-minute is pushing it up, but eventually it slammed down, and so you're bearish. And so you could have profited from under Ichimoku, puts, take profits. Puts again, take profits. Puts again, take profit. You know what I mean? Like, that's what this helps. Now, if I have it on a 5-minute only, like some of you guys are asking, like, what if I just have the 5-minute on? And you have a 5-minute squeeze, then you kind of get the sensation of like, okay, we're going to go up. But then how do you know how much more you're going to go up? This may look like we're still bullish still, but it's starting to drag. And then we came down. It's more sensitive. But if you start to add all the other ones, you can say, well, the 5-minute squeezed out, or 5-minute starting to make its move. Now moving to the 15. The 15 is already bearish. The 30 is already bearish. The 1 hour is already bearish. Okay, we're going to come down. The 5-minute, it needs to happen first, in the 15, and the 30, and 1 hour, and so forth. This helps me to stay bearish because there's all these squeezes there. If there wasn't the squeezes, I wouldn't care so much about it. This is only used for the squeezes, which we've seen lately. There's a lot of squeezes. So even this is a nice view too, right? Because this is basically all this times we are in a squeeze. There's just this one time we went on the 5-minute. Every other time frame was bearish. Could that help you trade puts here? I think so. So if you take advantage of that, right, then you can start to print. Like, remember this day right here where it was like super bearish? I mean, take advantage of it. Look at this. This is why I'm saying study the charts, all right? Study the system, because how bearish are you? You have a squeeze here, right? Look at this histogram compared to that one. Are you not more bearish here across the board? If you have just a 5-minute, it doesn't give you that sensation, because the other time frame, there's other squeezes there, and these other time frames are bearish. They're already bearish. You're just waiting for the 5-minute to come back down, and came down. This is like 500% right here. Like, it's crazy. So I feel it's a lot easier than it was before, honestly. So if you guys can work on studying it and practicing it, I think you could do really well.
And then can you also go to the bell where the trash can is, like on the left side?
Yeah, right here.
Yeah. So if you go to the third one beside the bell again, where the dots are, like in a row, there's a large dotted line, like this pane, and then there's like another setting as well, I think, in the same one. So what does that do?
This right here just gives you the dashed lines. if you want to see that. I have mine turned off because I don't care to see it. Right.
So let's just say I wanted 780. Like that's a big open. That's a big open interest level, right? I want that on the whole time, like the whole day. How do I make that happen?
So you don't need to look at it. You don't need to look at this at all. You just, if you have it on, right? Let's say you chose 775 right here. Just right click and then set an alert at 775. And you see it's hollow right now. Double click on it and that persists.
Double click, like a left or two rights?
The left. Double click.
Left. Okay, two lefts. Okay.
Yeah. The one that you use to select. So it's double click.
Okay, and then it should be hollow. Okay.
Yeah. And then like, I think I went over this before, but if you want to arm all of your alerts, just click this. All of it will arm. You see this? This is all the OI levels. So most of these I think persist. I think I have it all persist, which could be super annoying if you have this guy on, right? If you have like
SPY over 747.
Because when we're consolidating, you're gonna hear him all the time. It's gonna be like, it's over this, it's under this, it's over this. So if you want, you can not persist it. I like to have it persist. You yourself is just trading, so you might be okay with it. For me, I am live streaming with you guys, so I'm pretty sure you don't want to hear that all the time. So yeah, you could just decide to do that. So that's just arming all the levels here, right?
Okay.
And so, and this is actually a good kind of not a segue, but like I think this is a good addition to kind of consider. Like in the morning, you have the high OIs, right? Like why not mark your levels? Why not have the persistent level? I think that's a good way to look at it. Why not, like, instead of arming at all, let's think about the levels, right? I'm actually glad you asked that question. Let's just mark them. You know, there's double digits, boom. All right, let's add that. Let's add this one right here. You know, there's one right here. Let's add that. All right, this one's small. Might not care about that. Okay, let's add this one. You know, you might be able to do something like that. SPY special, Q's is special, and DI is special. I'm gonna speed it. I'm gonna treat it special. So maybe in the future I'll have this like auto do this one for you because I know particularly what I like to see. I like to see the double digits, and it might just do this for you. But again, it's all about just priming yourself, right? If you can prime yourself to say, I know where these big levels are, and let me set it so that when you're watching price action, you know it. It's not like you're setting these levels, you're not aware of it, right? There's a big difference, okay? Because that way, when you're looking at price action moving, you know where it's going. You already have that preset, right? It's already primed, you know, and then you're following through with your game plan, right? It's not like, oh, I thought we're going to go all the way up here. And it's like, no, you knew, like you marked this level. You knew there was a level here. I can't tell you guys how many people just hold on to this and they're just like, oh, I thought I was going to get to 775. It's like, what do you mean? There's other levels here, right? So you got to respect the levels, got to know which levels to watch out for and look for. Okay.